Hello, everyone. Welcome back to Bull or Bear 2023. You were with us for show one just now, and now we're on to show two, where we'll cover navigating opportunities in China. You're back with me, Olivia Higgins, your host for today. And as always, you're always with me, guided by the team and also our expert analysis on site, because it's always good to have a two-way discussion about the potential topics that we'll cover, because it's all about potential opportunities at the end of the day and what to look out for, because it's already the new year. 2023 is around the corner, and so these shows have been put together to really analyze and see what the Q4 investment strategies are and what the outlook will be for the next year. Now, given global uncertainties, we continue to look for potential opportunities. And of course, the Chinese market is quite hot right now. And so today it's all about going into the Chinese space and learning key insights about the China equity market from our expert from abrdn today. So with that, I would like to introduce our investment manager at abrdn, Xin-Yao. Welcome, Xin-Yao.
Hello, thanks for having me. Hi.
Hi, thank you for coming onto the show. Now, as always, to the audience, remember this is for educational purposes. So we're here today to have a conversation with Xin-Yao and to figure out how we can benefit from their perspective, but at the same time, how we can guide you in making better investment decisions. Now, Xin-Yao, maybe tell me more about yourself and the topic for today and how the audience can benefit from it.
Okay, I will not waste so much time, so maybe just briefly. Well, abrdn is one of the largest Scottish, one of the largest European asset manager. We're based in Scotland. We invest across a lot of products, whether it's equity, fixed income, multi-asset, etc. I'm Xin-Yao. I'm based in Singapore. Singapore, we actually just celebrated our 30th anniversary this year. So although we're a Scottish company, Asia Pacific has always been a big heritage for us and accounts for a lot of our equities. And then in Singapore, we manage Asia Pacific equities. So we invest across the region, and we have offices including like Hong Kong and Shanghai. So we're not managers investing in Asia from afar. Hopefully that's a useful takeaway for everyone.
Okay, well, thank you for the introduction. And to the audience out there, we're having some giveaways throughout the session, but remember, your questions are always the most important for engagement with us. So if you want one of your burning questions to be answered by our guest speaker today, be sure to type it down in the chat box. And if you're on YouTube, remember to go in-app and ask your questions there, because that's where our team will be picking out the best questions to ask so that everyone can benefit from this educational session. Now, Xin-Yao, I understand you've got some analysis to share with us, right, on the China equity space?
Yeah, looking forward to it.
And
it will be useful for everyone.
Sure. So the floor is yours, and we'll be back with you for some fireside questions.
Okay, cool. So do we have the slides on now?
Yes.
Okay, cool.
What's yours, Xin-Yao?
Okay, I'll start right away on slide one. Well, just to set the agenda, today I'll talk about China. So with this slide, I'll try to give some context, and then maybe I'll give a summary of our view, and then we can look at what our investment teams, at least from our perspective. Hopefully that will help everyone in your investment in China or how you look at China equity. So just to start with slide one, trying to give everyone a bit of a context. I like to use numbers to give context. So, well, first of all, no secret, China equity has been quite difficult over the last sort of 1.5 to 2 years. Since the end of 2020, it's down like 48%, versus MSCI World is up like 0.5%. So like down half versus flat. That's quite different, obviously. If you look at the slide, I give some numbers. I mean, in terms of valuation, if you look at forward-looking price to earnings ratio for China, it's like 11 times for 2023. It's much cheaper than other markets, and I'm sure give a few reference there, like versus MSCI World versus MSCI Emerging Markets. It's also below its long-term average if compared to, I mean, it itself. So long-term 5-year average is like 13 to 14 times. is well below. At its peak, it was 19 times, right? It's almost, in terms of P multiple, it's collapsed almost by half. But at the same time, earnings growth is actually not weak. Well, earnings expectations have come down, but earnings are still growing for Chinese companies. In 2023, for example, I mean, this year's growth is actually expected to be around 13%, 2022. If you look at 2023, we're expecting the expectation roughly is about 19% earnings growth for the index. If you compare to others, like MSCI World, the expectation is like 5% this year. MSCI Emerging Market is like 2%. So this is not a market without earnings growth. So throughout this troubled times, earnings are still growing, and we still expect high growth going forward. But of course, there are challenges, which is why the stocks are weak. So there are reasons for it, and we will need to see sort of improvement in the fundamental to drive the stocks, quite certainly. So I mean, if you look at all these numbers, then what I'm trying to put across is that there is definitely value. Of course, no one wants to catch a falling knife. So it's whether the fundamentals have improved. If it's improving, there's certainly quite a lot of value in the upside from here. Yeah, I mean, everyone likes to paraphrase Buffett. It was so useful now because, I mean, he always said, right, to be greedy when others are fearful. And you have heard some commentaries about how some people talk about China being uninvestable. I mean, that's debatable, but we think there's value there. And I'll move on to the next slide, because from slide 2, I mean, just a brief in terms of the outlook, putting this up front. I would summarize 3 things as impacting the China equity and sort of pulling it down. One is the weak economy, including, of course, the property crisis has been quite forefront in news. The second is the lack of economic support. This year, there's cabinet reshuffling. Actually, across markets, across countries, whenever there's a political situation, election or whatever, generally policies tends to come in soon. And in emerging market, policy can be even more important. So for example, China. And we had, despite the economic slowdown, we had lack of economic support this year thus far, especially before the October's cabinet reshuffling. And then thirdly, people are concerned about geopolitics. Of course, I mean, the superpower conflict, China, US, that relationship that comes to the forefront as well. So addressing each of this, I mean, from our perspective, what we think is we actually see things changing. I wouldn't say it's extremely bright immediately, but we do think that things are changing. I mean, first of all, in terms of the economy, there has already been green shoot. For example, in September, quite a few economic data was better than expected, like GDP, retail sales, etc. Obviously, it's still volatile, it's not stable yet, but there are signs that it's starting to improve. Monetary policy has actually been supportive. So the government has been reducing interest rate, etc., reducing the reserve ratio for the banks, releasing liquidity. That is quite in contrast to a lot of markets out there, like US, everyone knows, they're hiking the rates quite rapidly and tightening liquidity. And since October, I mentioned the cabinet reshuffling, how politics can result in a policy stalemate. But we have actually seen quite a bit of action over the last 1 month. So now that internal politics is more settled, it seems like they can concentrate more on the policies now. So we have seen very supportive policies on the property, on COVID management, etc. So all this could help. And then I mentioned property, and our view is that there's no hard landing in the property sector. Partly the government support is coming in. Partly a lot of the news is on private developers, which yes, there are a lot of highly leveraged developers that are in trouble. But actually a large chunk of the market is also state-owned developers who are very, very healthy and still sort of, they're not in crisis, so to speak. And thirdly, on the China-US relationship, well, let's not pretend like the relationship is going to be rosy and there's going to be romance between the 2 countries. But at least we don't think it's a Cold War. We think the relationship is lukewarm. And I mean, early this month's Bali summit actually shows that actually none of them actually wants relationship to be far too sour. Right? It benefits no one in the world. So that is not the worst case for us as well. Like worst case, people imagine the Cold War, etc. So if you think about all this from our perspective, we do think things are changing. It'll not be smooth sailing. It'll be a volatile market, but I think over the 1-2 years, this can be quite interesting, especially if you contrast it against overseas. A lot of market continue to tighten, recession risk in Europe, US heightening, for example. China could be quite counter-cyclical from that perspective. Okay. Next, I'll move to third slide. Well, I'll jump straight into where we think you could invest in China. I mean, I already gave a positive view on China, so let's talk about where to invest. I'll take a step back and say, as abrdn, at abrdn, we try to invest for the longer term. So my teams will focus a bit more on the longer term as well. Well, long term, these are teams that we think are applicable for at least the next 1-2 years, longer term as well, right? So I'm not trying to focus on the next 3 months, 6 months, etc. So in terms of investment teams, I mean, China is a large universe, over 5,000 stocks. So you do need to sort of filter down into selected spaces to invest. And we do think, especially for a lot of emerging markets, it's not just China, you do need to be very clear about where policy is heading, etc. And that helps to direct investment. So taking a step back and look at China, I guess one thing to remember is that it's still an emerging market. Policy plays a very big role. If we look at where it is now, we think it is still developing. It has just sort of talked about completely exiting poverty. They have a target for moderately wealthy society by 2035. So if you look at what the China could be in, say, 10, 20 years, what we think is that one, the middle class will continue to grow. The country will continue, the people will continue to get wealthier. There'll still be growth. Growth might not be as fast as double digit in the past, but it'll be better quality growth that maybe is less reliant on infrastructure, less reliant on property. So we have aspiration as a first team there. It's all about the wealth growing and how people spend differently as they get richer. And we think the economy overall will become more advanced. Moving up the value chain is one of the big objectives of the government. And there you can find opportunities. We call it digital, but it's more about maybe the advancement of the tech economy from a broader perspective. I think when we talk about digital as well, I mean, two things to highlight. One is from a nearer term perspective, internet might actually be quite an interesting play from the perspective that valuations are very cheap, but it might not be as high growth as in the past. But within digital, there's still opportunity for growth. For example, B2C has advanced with the internet plays, but B2B plays are still growing very fast. There's still a lot of room for adoption and penetration. So we like some software names there. I could mention, maybe we could talk a bit more details later, but just to stop there. We also think that the country will become greener. Greener is so that one, the people actually have a better living environment. But also two, it can meet, the world needs China to be greener. And they will move in that direction to help with global climate change. So being greener, that's a big theme as well. As the country advances, as people get wealthier, we also need to remember that China do have a problem with aging population. But that's a problem for the country, but it also does create investment opportunities. So healthcare, from our perspective, is also an investment team, a long-term investment team that's quite structural. And there are some good names in China for this. So health is another. And the last one is wealth. Wealth, actually, there's two ways to look about it. One is in terms of wealth services. As people get richer, they need more from that. The other side we wanted to highlight is also just the development of the whole financial system. Later, I'll have some numbers to show, but essentially, we think the capital markets will develop further. It's actually still underdeveloped compared to like Hong Kong, Singapore, US, Europe, etc. There's a lot of room for development and a lot of capital that could go into investment markets. So these are the 5 themes: aspiration, digital, green, health, wealth. I spent a lot of time on this slide, but in the following slides, maybe I'll be able to spend less time on each slide. Next one, just jumping straight. Next slide, slide 4. This one is about, it's just a few data on the growing middle class. So the main theme here is really premiumization. So the middle class, compared to 2020, over 10 years to 2030, McKinsey expects the middle class to grow by 68%. If you look at compare that again in the US, I thought it's very interesting. If you look at 2020, it's really almost double of US, the number of households in the middle class group. By 2030, it's about 3 times. That shows you the scale of the market for sort of consumer brands, etc. So as people get rich, they do spend differently. For us, there's both sort of nearer term and longer term themes. From a nearer term perspective, that could be in play for the next 1 to 2 years, right? The normalization of offline consumption. Offline consumption this year has been quite volatile, quite difficult, but we see that normalizing. And there are quite a few plays there. For example, we like sportswear. That's a growing theme in China. So a lot of the local brands are leaning, etc. We think that's great prospects as offline consumption normalizes. Secondly, that's also about sort of travel. As borders reopen, we expect, China is a big travel driver, and we expect that to be unleashed eventually. And when that happens, well, it might be quite difficult to play things like airlines. Up to individual, but our perspective is that airlines are quite difficult businesses to invest in. Airports as well, if you look at the stocks, actually a lot of them has gotten back to pre-COVID valuation. So maybe you don't have that much value. But some interesting ones might be like insurance company like AIA, who in the past sold a lot of policies to sort of meaning Chinese traveling to Hong Kong to buy US dollar insurance, right? So that could be an interesting theme. And we think AIA is a very strong stock, for example, benefiting from this. So just a couple of examples there. So I'll move on to the next slide. Next slide 5 is a table showing how the economy has developed over the years. This is about the service sector growing. Well, I guess this is common for all economies. As they develop, you will see that the service sector, the tertiary industry, which is the service sector, that will grow in the weight of the economy. And you see in China, I think it's quite obvious from the chart. What we're trying to show here is that China economy will continue to advance. And then as it advances, sort of companies in the service sector will get to gain more. What we mean by this, I can show you, I can give you an example using the sportswear value chain, for example. I mentioned we like sportswear. If you look upstream, maybe like 20, 30 years ago, we could be investing in a textile company or a rubber company that make the shoe soles, right? These are in the early stages of a developing economy. As they grew, there are some manufacturers that are actually very good in China, for example, Xin-Yao International. We still think it's a good company, but it's the manufacturing segment, it's not the highest value within the sportswear value chain. And now as the country has developed, also you see that the people having a lot more confidence in their country, a lot more confidence in domestic brands. The best player within the sportswear value chain is now in the brands, which owns the best value in the sportswear value chain. So for example, I did mention like companies like Li-Ning, we think are very interesting. So it's both from perspective that there's some sort of momentum or recovery momentum behind it as offline consumption normalizes, but also from a longer term perspective, that's the direction that the country will take. Okay. Next slide. I'll move on to the next slide. Next slide 6. Slide 6. This one we talk about the country moving towards self-reliance. There have been a few buzzwords from the recent Congress, whether it's self-reliance, security, self-sufficiency. So these are both buzzwords that came out of it. one of the key things we think is localization. In this table, we show semiconductor, we show their oil, their dependency on these two. I'm not specifically trying to say how we play oil, how we play semiconductor, but just want to show that there are quite a few segments where the China needs to develop internally in order to reduce their reliance. And this all plays to the theme around being self-reliant, security, etc. When we talk about localization as a team, a couple of things we like are, for example, software. I mentioned in the front that B2B is still developing. More and more companies are using local software, which are cheaper, customized to the language, customized to their local needs. For example, there's Xin-Yao who dominates the market for ERP to sort of state-owned companies. We think they have great prospects ahead. There's a company called Glodon, which is quite interesting, where it does SaaS for the construction industry. You might think that amidst all this property crisis, this company is probably terrible, but actually it's still actually quite resilient. We show how much room there is to penetrate in terms of software adoption. And our team has been forefront of sort of the positive policy direction in cybersecurity. So there are companies like Venus Tech that we think is very important, very interesting. One additional one is sort of the localization of certain components and industrial components and robotics. So automation, robots. There are some companies here that are quite interesting. For example, Innovance that produces more servo motor parts. That's another theme from a localization perspective. This company are replacing MNCs. They are more expensive, but not as customized to local needs. I'll move on to the next slide. This slide we call it energy localization. So it's more about how the country has been at the forefront of sort of the going green theme. And energy localization actually is also related to the slide in front. We talk about oil dependency. As the country use more renewable, they'll need less imported oil. Now, in terms of energy localization, I mean, China has been at the forefront globally in renewables and electric vehicle adoption. If you look at wind, solar, for example, global, they are like between 30 to 40% of global capacity. If you look at electric vehicle sales, for example, they are about nearly 50% of electric vehicle sales. All these are based on 2021 statistics. So there's such a large local demand, and that has helped foster some major players of global scale. And generally, that's what we prefer as well, find global leaders in these areas. They tend to be equipment makers that we like, rather than upstream, which are more of the raw materials, because those are more cyclical. We are not as much of a fan of downstream, like the solar farm operators or the wind farm operators as well, because returns are lower there. So we like equipment makers, for example, in battery, CATL, Contemporary Amperex Technology, very long name. But they are a global leader in battery, very strong technology, very strong cost advantage, that we think will be in this play for a very long time. The other one, Longi, leads globally in terms of solar wafer and solar module. So I think that's very interesting as well. What you might ask is, if you look at this tree, it seems like wind isn't as favored. Well, partly in China, a lot of the companies have done much. The solar companies have been much stronger than those in winds. So like wind turbines, the technology might not yet match up to like some of the European makers or even General Electric in the US. But we are starting to see interesting team even within wind. For example, offshore wind could be quite interesting to look out for. Another thing about battery is also energy storage. We could also see China pushing very hard. And there are some names there, for example, like Sungrow, they are going very fast in the energy storage. These are all sort of very interesting themes just within renewables that we like, that worth you looking at and exploring. So I'll move forward. Next one is on China's well, aging population. I guess it's a known problem. China has an aging population. But the aging population, together with rising wealth, as people get rich, you do have more sophistication in terms of your demand for healthcare. You also consume sort of more indulgence. And actually, in wealthier countries, you have more chronic lifestyle diseases, for example, diabetes, etc. All these drive higher healthcare needs. And so we like healthcare as a team in China. And it's quite interesting here. It's a broad space because there's both domestic play. For example, we like an eye care chain called IRI in China. It's the largest private eye care chain in the country, growing very fast, very consistently. And eye care is a more standardized therapy, which they have found a way to sort of standardize the operations and scale it. But there's besides domestic opportunity, there's also global opportunities. For example, we like Mindray, which is growing very fast overseas in terms of diagnostic machines. And they are selling more and more to emerging markets. If you think about it, China has a huge growth in healthcare infrastructure, which is still growing very fast. But in some countries, it's even more backward in terms of healthcare infrastructure, like certain countries in Southeast Asia, Indonesia, Vietnam, etc. India is also more backward. And all these countries might need more of these products. For the more basic products, they might not buy in from the European companies. And it might be a Chinese companies with better cost advantage. They can have a bigger play on this. So these are some companies that we like. Well, we are mindful, however, that healthcare also have risks because reducing the cost of healthcare is one of the key imperatives of China government as well. So we have always avoided companies that could suffer from the country moving towards more value-based procurement or central procurement. For example, a lot of generic drugs, pharmaceutical companies have suffered over the last 2-3 years because of that. Moving along, so now brings us to the last theme. So I just want table showing a comparison of sort of the wealth distribution in China versus other countries. Quite simply, the big takeaway really is that property and cash is like 80% of wealth of the typical household in China. That's very high compared to any other country in the region, in the world. And well, no secret that a lot of Asians like property. So I mean, property is big there, but it's that the rest of the financial system is still underdeveloped. So a lot of financial products are still not available in China versus elsewhere. The sophistication is still being developed. We think that over the next 10, 20 years, as the country develops, we think the financial system will continue to develop along with it as well. So really, I think I did mention this in the front. Really, two themes here. One is in terms of companies that could benefit from it. For example, within banks, the more retail-oriented banks with a large wealth franchise, for example, like China Merchant Bank, they could benefit from this thing. The other side is insurance. If you look at this, insurance is very low. Insurance penetration is still very low in China. So I did mention AIA in front that could benefit from sort of travel reopening and more mainland Chinese returning to Hong Kong to buy insurance. They also benefit from rising sort of insurance penetration. So that's another theme. But more than that, from a broader perspective as well, as the financial system develop, we expect more capital to go into the China market. And maybe one takeaway from this, it might be quite interesting, but we actually think that the Asia market, from a longer term perspective, the Asia market is strategically very useful because it has very low correlation with the rest of the world. Generally, it's less volatile than sort of overseas listed China stocks as well. So Asia market is pretty interesting. Although I must say, over the next 1 year or so, in the nearer term, it might be the overseas China stocks, for example, the Hong Kong listed one or the US listed one. They have, because these have fallen harder, they might have bigger upside in the nearer term. But long term, strategically, Asia is very interesting. With that, I'll go to the last slide so that we have time for hopefully some interaction or whatever. Last slide, just as in terms of takeaways. Now, I just want to mention that there've been a lot of big investment managers that say China is uninvestable. Well, different people have different perspective, and it's all about what you build your fund for and your sort of capabilities. But I think we don't think China is uninvestable. I mean, it's a market with over 5,000 stocks. For us, 5,000 stocks for us being in Asia with people on the ground. To say that is uninvestable is quite an extreme sort of message from our perspective. But we do think there are conditions in order to invest better in China. For example, I think there was a point in time where a lot of people got complacent and forgot that China is very policy driven. The good thing is it's very transparent in terms of what they want to do over the next 5-10 years. They have the 5-year plan. They have a longer term 20-30-year plan. So people just have to study that. Unfortunately, of course, all these are in Mandarin. So a lot of these asset managers that say it's uninvestable also in Europe, in US. Maybe they don't have people who can read Mandarin, but that's important. It's important to read and speak Mandarin. So with that, just a few takeaways. Like one, we do think China outlook is improving. So there's a lot of value there. The second point, there's a lot of value there for the growth potential. So it might be quite interesting time to be looking at China equities. But thirdly, as with any market, actually, it's very important to be selective on where you invest in. So I've tried to sort of narrow it down to 5 themes. Hopefully it's easier to remember. So aspiration, digital, green, health, and wealth. So these are the 5 themes. With that, I'll wrap it up here and take questions maybe. Hopefully that's helped.
Thank you so much, Xin-Yao, for really just summarizing at the end whatever you just covered in very comprehensive analysis. And that's why we're here today. For the audience, it's about being that bridge to experts like yourself so that you can provide that perspective, right, based on your analysis in the Chinese space. Now, I've got a few questions for you because I've crafted it based on, what the audience wants to hear about. But before we go into our quick chat, I'd like to go into our first giveaway for today. Now, thank you so much for joining us. It's our way for rewarding you for being with us right here. So our first quiz giveaway for everyone, I hope you've been paying attention. Now, here's how the quiz works, all right? So the first 5 users who answer the questions correctly, you'll be awarded some points from us. And you get to, redeem those points in any way you want. But really, it's about being part of that interaction with us. And we're here to reward you. And I hope that you've, taken this as a learning lesson for yourselves. Now, are you ready for the first question? Fastest fingers first. And of course, you have to get it right. On the count of 3, the first question is, the valuation of China stocks is low because their profit growth is low. True or false? Type it in the chat box in your moomoo app. Is it true or false? Fastest fingers first, and you got to get it right. Now, we've got a lot of activity happening. You guys are very quick. All right, looks like we've got our winners. Now, the answer was false. Congratulations. The teams will be in touch with you. So stay tuned for the following giveaways later on. All right, back with you, Xin-Yao. Now, after your analysis, I came up with a few questions. Now, I just want to know, the US CPI recently came in slightly lower than expected, right? So the ECB thinks that we're near peak inflation. Now, peak inflation, whether it's peaked or not, very hot topic now. Now, does that in particular change your view that conditions will stay tighter elsewhere other than in China?
No, not exactly. Yeah. So one is that it seems like inflation might be more stickier than maybe in the past cycle. Some of the conditions are still there. For example, energy prices are still quite high. Semiconductor chips are still kind of in shortage. Maybe the shortage will ease over the next 1 year. But there are still segments that are seeing shortage, for example. So a lot of all these things are driving high inflation. And if you look at, CPI in US, for example, lower than expectation, but still core inflation is still over 6%. that's actually very high. So actually we think maybe the pace of sort of tightening might slow a bit, but it doesn't take away that the peak might still be quite high in terms of the peak rate.
Points there. Now you cover opportunities, but of course we want to look at the flip side. So what are some potential risks that are associated right now in the Chinese equity space? And let's look at the time horizon of going into 2023. So perhaps short to medium term.
Yeah, I mean, in terms of the shorter term, well, we think it'll still be volatile. I mean, essentially China is still a policy-driven market, like a lot of emerging markets. We think the fourth quarter, in terms of if you look at earnings expectations across companies, it might still be a bit soft. So might not be exactly off the bottom in earnings. But we do think that a lot of it is already discounted in valuations. We think that going into 2023, we will start to see positive momentum. And so, I mean, you do have to look past some of this shorter term volatility. But we think the valuation compensates for it, as mentioned. So that's probably one of the key risks. Yeah.
Thank you for that. So the sectors that you outlined in your presentation, right? The services sectors is quite broad. Now, is there anything in particular or something you'd like to specify to point out in terms of priority for the audience watching?
Yeah, I know services, when we look at, especially using a chart looking at tertiary services, so broad. Well, the main gist is, from our perspective, is about, in terms of looking at value chain, going down towards the higher value end, which tends to be more downstream. That's usually where the services are, and getting closer to the consumer. So there are certain things we like. For example, we like I mentioned sportswear. Within consumption, we think that's actually very interesting, especially the local brands. Actually, beyond that, we also see Nike improving. Actually, Nike improving sales in China. That recovery could drive some companies. For example, Xin-Yao, I mentioned as a manufacturer, that might not be the part of the value chain we like the most, but I mean, as a sportswear chain, it could be quite interesting. But services segment also is about companies where they are more value added. So, for example, like within healthcare, I mentioned IRI, Mindray, but there's also a company called WuXi Biologics. It's a contract research organization. It's one of the biggest in the world now. I think it's number 3 or number 4. I mean, exact market share is very difficult to get in for this industry, but they're like number 3 and number 4, and they are very advanced in their technology and growing very fast. So these are all companies that can be quite interesting.
Right. Yeah, these are potentials. And of course, I've learned a few pointers here and there from what you just shared. So thank you for that. Now, energy, right? Relating to the energy sector. Now, why is China so much ahead in solar energy compared to perhaps wind energy?
Yeah, I mean, it's a good one. Well, in China, first of all, solar reached grid parity earlier. So that helped. Also, in solar, it's less technology driven. I mean, in a sense, module and wafers are a bit more simpler compared to like wind turbines, where maintenance also is a bit more challenging. So when we look at the solar, like companies like Longyi, their wafer, their module is up there with anybody in the world. They also have greatest cost advantage. So that has drove the China adoption much faster as well. And also because of scale as an advantage, some of the companies in the solar are much bigger than the Chinese companies in wind. Also, like because of higher technology needs, like the wind turbine makers in China, like GoWind, we don't think their technology matches up to the European or the American players yet. So that partly holds them back. If we are bringing sort of the European or US wind turbines into China, it tends to be a bit too expensive. So returns in renewables are actually quite low for operating wind farms or solar farms. So driving down costs is actually a big imperative. And the Chinese manufacturer, those who can make it, are much more much more helpful in driving that trend to make returns more viable.
Thanks for highlighting that. Now, in your presentation as well, now just to end off our fireside chat, you mentioned the aging population, yeah? So China's aging population as a potential concern. Now, is it really, and how concerned should one be? Because if you're looking at, the size of their population, people do wonder, how do we balance everything within that space?
Yeah, I mean, it is definitely, from a longer term perspective, it is one of the structural sort of headwind or challenge that China does have to face. I wouldn't dismiss it as a problem. So there's two ways to look at it. One is the impact on the economy. Because of aging population in terms of workforce, the labor force in China is actually shrinking every year, shrinking by roughly about 2%. So they do have to make up for it in order for GDP to grow. So how do they make up for it? One is sort of the aging population contributing more to the economy. So we talk about opportunities in terms of consumption, healthcare needs, etc. But more than that, it's about how they improve productivity of the labor force. In that, actually, I had thought about one other team, for example. I mentioned robotics, automation. That could be a team in China. And that's actually very important in trying to overcome this issue. A lot of factories in China are already very automated, very advanced. For example, if you look at some of the logistics warehouse, they are as advanced as any in the world. And that's very necessary. They need more of the factories to automate, use more robots, etc., so that they reduce the need on the local labor force and also improve the productivity of the people. And as they replace all the sort of more mundane work with robots, etc., then people can move on to higher value work. That's where they drive the productivity.
Agree with that. Yeah, I mean, there's a lot of talk about the fear of automation, but in fact, maybe it's better to have that as part of a complementary tool to support problems like an aging population. So very key insight right there. And thank you for sharing that. Now, we have some time for a few questions, and we've got a lot of questions that have come in for you, especially when you were presenting just now. So I've picked out some of my favorites, but before we do that, just to summarize and round off our fireside chat, what is that key takeaway from your presentation you'd like to share before we go into the live Q&A?
Well, I guess the key takeaway is really that we think there's room for China still in portfolios, but you just have to invest very, very selectively. I guess a lot of the audience are retail investors. I don't know, maybe you invest yourself, maybe you invest your funds, but the most important thing is actually to be diversified. You don't want to be very concentrated in a volatile market. Any emerging market, including China, you want to be able to invest diversified and be very selective about your teams.
Very important. Thank you for sharing that. We'll be back with you shortly, Xin-Yao, because I'm about to show the audience how they can actually access your funds and apply what they learned today. So we'll see you very soon for the live Q&A.
Okay, cool. See you.
All right, to the audience watching, keep the questions coming because, it's always great to have you thinking and on your feet when you're, about to analyze his analysis. So it's great and I love it. And I've already picked out some of my top questions, but we'll answer it towards the end. Now, I just want to show you how you can quickly access the funds because whatever he shared just now, it really, you have to put that to good use by applying what you learned if you're interested in really, like he said, diversifying your portfolio or to actually just, make decisions that can help to guide you towards better investment decisions. Now, this is how exactly you can do that. So if you open your app right now, you go to the trade button, right here, go to Money Plus, and you can see very clearly the fund houses right there staring at you. Click on that and you'll see on the top left-hand corner, first one, abrdn's funds. All right. So click on abrdn and you'll be listed into this entire page of the available fund names. Yeah. So you've got, a choice selection right here. It really depends on yourself, what you have taken away from the key insights that Xin-Yao actually shared today. and you can decide which one you like to go into. So for the purpose of this, let's go into the China A shares. If you look at the Sustainable Equity Fund as an example, you can see all the information you need to know, especially live information. I think this is really important because you get to see all the details and also updated feeds of how it's doing. You know, you're looking at the yields and you're also looking at the analysis. Now, for me personally, I use news and analysis quite a lot, and I do this daily. So you go to analysis and you can see all the minor details that you need to know. But of course, it's all about details, right? When you're making a decision, and it's a very personal one. So it's really up to you how you want to proceed with this. But for me, it gives me a lot of reassurance when I have a lot of details to work with, because information and data is key in my own investment decision-making process. So I really hope that helped you as well. If you want more full details, comprehensive guides, you can go into the Learn section in our moomoo community and try to figure out how else you can educate yourself, because you have to practice discretion with every personal finance decision, and make sure that you do one in an informed manner before you do so. So if you're ready, you can click on subscribe. Yeah, so subscribe, and you can see an SGD right here. If you're ready to make a decision, you just input minimum 100 SGD and see if you can, work around that, and see if you can also integrate that in your current portfolio. So I hope you enjoyed that and that was helpful for yourself. For more information, type in the questions to our team. We're always here for you to guide you. Okay, let's do quiz number 2, everyone. Before I invite Xin-Yao back into the room. So quiz number 2, remember, you've got the first 5 people who answer it correctly, but you've got to do it fast. All right, so in 3, 2, 1, here's your question. abrdn likes China stocks because A, China has great food. B, China's economic and business outlook is improving. C, the Chinese culture is fascinating. Or D, the Great Wall is amazing. What do you think? Why does abrdn like China stocks? Wow, so many fast fingers. All right, we've got our winners. Our team will contact you. The correct answer is B, of course. Congratulations to everyone. It's our way to reward you for being here with us. Okay, can I invite Xin-Yao back into the room, please? Welcome back, Xin-Yao.
Hello.
So we've got some time for questions, and this is always the most exciting part of every live show. And the first question here is on investing in China. Which sectors do I focus on? You've covered energy, food, health, and there's so much more. Are there any sectors that you favor, and which ones should I avoid?
Wow. Well, I mentioned the 5 themes. So I guess those are all things that we invest in. So I mean, to say it again, certain consumer sectors will play into the aspiration team. So I mentioned companies like the sportswear teams, Li-Ning. We also like, for example, Budweiser. We think it's very interesting. Also tied to sort of offline consumption, normalization of offline consumption. Along with that, the premiumization. So in China, the fastest growing beer segments is actually premium beer. And Budweiser absolutely dominates there. So they've gone through challenges over the last 2 years because of pandemic, etc. I mean, they are a global company. Globally, they have had troubles. But their listed share in Hong Kong just plays to Asia Pacific, and China is their biggest business. We see very good prospects for premium beer in China as well. So consumption is very important theme. I mentioned software. That's more towards localization. And we think that's very interesting as well. So like Yongyou, Glodon, healthcare is very useful as well. So, and internet from a nearer term perspective, I think longer term, we have to question whether there's still, how much sort of internet penetration can still go on. It's already, in terms of internet penetration, China is already most advanced in the world. So you could argue that there's not much room. But look at where valuations now. some of the companies like Alibaba, Tencent are just in low teens. We do think growing at least high single digit or low teens is not a problem, even over the next 3 or 5 years or something. They do suffer from the economy given the size data. So as the economy normalizes, we do see rebound and valuation is so low, really. Their cash flow generation is still extremely high.
Right. Well, Xin-Yao, I mean, those are good points there, very important as well. But of course, I want to contextualize it a little bit more with a few questions. Now, there are a lot of questions on this in particular, you're talking about the protest right now. So someone has mentioned, I believe China's been a mess, in my opinion, recently due to zero COVID protests and other instability issues, causing a lot of fear in the market. Now, what are your comments on this? And will it recover from that going into next year?
Yeah, I mean, that's part of the problem for all the offline consumption, etc. A lot of the industrial companies, etc., has also been, face a lot of volatility in their operations because suddenly you need to sort of have special arrangements, suddenly you don't. Well, it is challenging, but we do think, ever since the Congress especially, we do think the direction is going to change. They set up that 20-point pointer around the COVID policy. A lot of it really is towards the direction that all the city governments have to be very targeted in how to implement sort of all the COVID policy, lockdowns, etc. What's important is also how they've been communicating to the public, and we see a big change there. For example, in the past, they'll say no COVID, right? Now it's changed. Now it's starting to change. For example, they say that they're starting to highlight like things like the low hospitalization rate, low death rate of the new variants. Vaccination rates still have to go up, but it's actually already starting to climb. So all of these are conditions that we think will set up for eventual easing of the COVID policy. So we're not saying that you ease immediately, but we think the path is there. And that's why I mentioned at the start that, well, we think it won't be smooth sailing. It's not going to be a one-way street, suddenly it keeps rocketing like few percent every year, one way up. It'll be volatile, but we think a volatile up. So it'll be a rocky climb up. Yeah. But we do think there's a lot of value, and all these small things are changing.
Okay, and I guess what you're really highlighting is that long-term strategy, right? At the end of the day, and sort of over, kind of not taking it too seriously, all these short-term impacts, looking at the bigger picture.
Yeah.
Okay, next question is about
summarize it.
Stocks. Yeah, you're right. China recently reversed its policy on property investment and caused a surge in the property stocks. So what is your outlook on this? Is it a time to invest, or is it still premature?
Wow, property stocks. Okay. Not an easy one. Well, we do think, first of all, just taking a step back and looking at the industry, we do think the industry, in terms of the policy direction for the industry, that has changed dramatically over the last 2 weeks to the positive side. So there's been a slew of measures to support liquidity of the developers. So a lot of the private developers are still in cash flow crisis, right? But we think this will actually reverse by quite a lot. But it's still important to be very targeted. And the policies are also very targeted. For example, a lot of most of these are target. I mean, I mentioned at the start that state-owned developers are actually still very healthy. They didn't need all the support. So all these are going towards the private developers. But if you look at the names that have been named, there are a lot of private developers in China. But like some of the bank measures announced over the last week, bank support announced over the last week, there's like 11 or 12 private developers only, right? So it tells you how targeted it is. And it might be that only these 10 to 12 will really benefit from the policies and be able to come out stronger from the crisis. So from a broader perspective, again, to summarize, we think the industry is improving, at least from the liquidity perspective. So we think there are lower chances of more private developers going distressed. So that will help one. But China is still maintaining that they want to keep property prices sort of measured, not let it increase too much, like going down crazy in the past, like in Hong Kong. they do still want private developers to continue to deleverage and manage their balance sheet. So you might not see immediate improvement in the physical sale of properties. So that's still going to be a sort of an overhang on the industry. So so last point. The golden question is, should we invest or not? Really, it depends on risk appetite. From my perspective, it's probably a bit racy and very, very high risk still if you are looking at all these private developers. What the measures will help is their cash flow over the next 1 year will be greatly improved, maybe no distress risk, but property sales are not improving, earnings are not growing. So not easy. It's actually a very short-term tactical bet.
Is what you're saying.
Yeah.
Very good point there, because the next question, because in our audience, we've got a mix of seasoned investors, we've got also our retail investors, they're all trying to find out how they can best invest, right? So what is the best way for a retail investor to invest in China? I'm so afraid of the risk. It seems like it's too much for us to handle. Thank you for that question. Now, Xin-Yao, what do you think?
Well, I'm not trying to promote the company, but the easier answer from my perspective is just buy a China fund. I mentioned that just now, one of the questions for Olivia. Olivia, you asked the question, what some of the key takeaways around investing in China. And I mentioned that one very important bit is to be diversified. So actually, with any emerging market being emerging market, you should expect higher risk, prospectively higher return, but higher risk. And so you do want to be diversified. So if you're wealthy enough and you know enough companies yourself to invest across 30, 40 stocks, typically by law of statistics, right? At least 30 stocks usually is how you want to be diversified. So if you have enough wealth to and you know enough stocks to invest across 30, 40 stocks, well, by all means, do it yourself, no problem. I'm not saying you have to invest in funds. But of course, funds are there for a reason. And the easiest way to get diversification is to buy a fund, honestly. And I do think you should be diversified in a market like China.
Based on current developments where China is wooing Saudi to price oil in yuan, what is your view on the possibility of this replacing the petrodollar? And what is the impact on both the Chinese and the US market for 2023?
Sorry, the question is China renminbi replacing the petrodollar?
Yeah, I think they're talking about currencies related to the price of oil at the moment.
Okay. We don't think it'd be big, actually. Renminbi replacing the dollar in the transaction of oil, essentially. I think that's the question. So we don't think it'd be big. There's been some arrangement in the past where China has tried to sort of negotiate contracts, direct contracts in this. But I don't think it can replace the dollar immediately. There's several things. One is the dollar is the reserve currency, partly because US is the largest economy, is very developed. The financial system is very stable. It is already a developed market versus China is an emerging market. So sort of the jurisdiction behind the currencies are different. And so you need a certain sort of different system to replace that. But in terms of trying to do that with oil and etc. as well, China is an important importer of oil. They are not an exporter. If they are an exporter, maybe they have maybe they could have the bargaining power, etc. But they are not. So it's quite difficult to change the world dynamics. What they are doing is just small contracts and stuff. But even Russia, they were such a big exporter of oil and gas in the past. It's mostly through US dollar. So it's not that easy to replace the reserve currency. Yeah.
Good points there. Thank you. And the last question from a global perspective and macro as well, will Chinese companies eventually move away from the US listing as their priority and get listed on other markets? What are your thoughts on this? Because I do know there are a few, even in the future mobility space, right? They're already listed in around, Asia in general. So what are your thoughts on this? Looking into the medium term, at least.
Well, from a medium-term perspective, it is definitely a direction. Actually, it's both medium-term, long-term, even short-term, let's say. More and more companies will try to list in the Asian market. And there's various perspectives. One is that with increasing scrutiny from foreign investors, especially Americans and Europeans looking at investing in China, sort of the valuation premium that you might have in US in the past is no longer there. Actually, you have lower, you might even prospectively have lower valuation overseas. So that incentive for valuation is no longer there. What's difficult to replace is still liquidity. Like US is such a liquid market. Hong Kong is liquid, but actually is still not matching up to that. But like I mentioned, the financial system in China will continue to develop. The market will keep getting, A-shares is already very liquid and it will keep getting more liquid. So the incentive in future will be there to invest in A-share. From the perspective that the disincentive to invest in A-share will reduce over time.
Mhm.
Plus, you have increasing compliance risks in like US, right? Again, that adds to certain sort of disincentive in the US versus investing in A-share. You're actually more likely to get easier regulatory approval in Asia now than in the past. Right? So especially as the regulations develop, as the sort of the regulator, they are growing in their strength and developing their own strength and workforce as well. So all this actually, to me, the direction is quite clear. More and more companies will look at this in Asia.
Mhm. Thank you to the audience for your questions. I know we had a lot more questions that came in, but that's all we have time for today. Now, you joined us for navigating opportunities in China. And, we had Xin-Yao who shared his insights just now. And we also went into a deep discussion about going into, 2023. Can you believe it? It's already so quick. But at the same time, remember to always look out for possible opportunities because there always will be. And it's about, making your portfolio healthier and also guiding you towards better investment decisions. Now, Xin-Yao, would you like to share just, a final thought that you have for the audience before we end the show?
Oh, okay. Well, I guess look through the volatility. China will always be a volatile market. Actually, it's not just the past 2 years. It has always been a quite volatile market. But it can be a quite rewarding market over a longer term perspective if you invest in the right companies and you invest for the longer term. Well, the way to get returns globally in equity is through inefficiency. And China remains one of the more inefficient markets. There are things like the language, the capital control, etc., that increases the efficiency of the market. So there will always be opportunity. You just have to be very clear about policy direction, etc. Make sure you do your homework. So yeah, have fun investing in China.
Thank you so much for that. That was Xin-Yao, investment manager at abrdn. Thank you so much, Xin-Yao, for joining us. And I hope this is the first of many shows we're about to have with you.
Hopefully. Thank you, Olivia. Thank you, everyone at moomoo. And thank you to all the audience who dialed in.
Thank you. So to the audience watching, to reward you for being with us till the end, our final giveaway for today, quiz 3. Remember, the first 5 fastest fingers and getting the right answer will win the prize. All right. So are you ready for the third question? In 3, 2, 1. abrdn highlighted a few investment themes in China. How many themes did they raise? No options here. I hope you were listening. How many themes did Xin-Yao raise towards the end of his presentation just now? All right, we've got so many fast fingers. There we go. And we have all our winners. Congratulations. Our team will be in touch with you. All right. The answer was 5. So congratulations. Thank you so much for joining us today. And as usual, this was a pleasure having you because we're always having, these intellectual discussions, looking forward, looking into the future and trying to see where can we spot the opportunities in 2023. Now, as usual, you've got the email right here. So if you have any more questions about the fund, about the app, or for Xin-Yao, do drop us an email right here and also connect and follow us on this page. Now, this is show number 2, and we've got a series of shows for the next few days during this week for Q4 investment strategies and what to look out for global outlook in 2023. Now, scan the code here so you can find out more. And of course, we've got a lot of great content for you, and me and myself and the teams, we work very hard to provide you with the right financial literacy tools so that you can help yourselves make a better decision. So follow us on socials because we're very active in that space, and there's so much good content that we put out there. So do be sure to check out what we have in store for you because everything is personified and classified just for our viewers out there and made for what you want to know within the community space. So scan the QR code here. And of course, last but not least, we've got the campaigns coming up. Of course, we've got the World Cup happening right now. Very exciting. I'm watching it myself. But of course, to reward you from us to you, we've also got other campaigns like this for you to make sure you hedge during these times and help you, guide you during these inflationary times and rising rate environment. So do check out this as well if you're interested in finding out more. All right, so we'll see you for our next show. Remember, this was just an educational seminar and discussion forum for you. So third show happening tomorrow. We're going to cover APEC in the post-pandemic. And here are the details for tomorrow's show. I really hope to see you there. As usual, check out our social media pages if you want to tune in directly into the live, and I will put up some notices for you. So we'll see you for tomorrow's show. As usual, thank you for joining us. It was a pleasure having you today. Signing off, I'm Olivia Higgins. See you tomorrow.